We are over to the last learning unit of your Accounting 1A module, and the learning unit is called Year-End Procedures. Now, this can actually be a very simple and easy learning unit for you to understand and come to grips with, because it really only deals with one procedure. Now, next semester, you will be introduced to a couple of more year-end procedures, but for now, we really just want to teach you how to do also what is referred to as the closing transfers. Transfers meaning journal entries. Okay, so over to page 268 and 269 of your textbook, and quite an important example, 9.1 on page 270. So where we are in a business in this learning unit is we are at the end of our financial year. So we are at that space in our business where we have been recording journal entries and T accounts and trial balances for 12 months. Now we are at financial year end, and according to this quote, you can see the financial year end process is by taking nominal accounts, closing them off against the final accounts, and determining the profit for the year. Okay, so what does that sentence actually mean? So nominal accounts referred to as your income and expenses. You should know this from learning unit 5 and 4. They are at the bottom of your trial balance. So nominal accounts means we deal with income and expenses. Closed off means we are closing the accounts, these nominal accounts, removing them, emptying them, transferring them, however you want to understand it. We are literally taking their contents and we are transferring it to the final accounts, okay? And we do this by making use of a double debit and credit entry. So we're taking all our expenses and all our income, we're transferring or closing it off to our final accounts. Now, the final accounts are new accounts that we create for this purpose to do these closing transfers. We work with two final accounts. Account number 1 is called the trading account, where we are determining gross profit. And the second final account is called the profit and loss account. And that is where we determine net profit. Okay, so reminder, profit is all income minus all expenses. That's something we've dealt with since learning unit 2. So you can see it is really all coming together where we've worked with profit a bit in the accounting equation. We've worked with income and expense accounts throughout, and now we get to that place in accounting where we actually go and use accounting to determine my profit for the year. By taking all my nominal accounts, closing them against the final account, journal entrying them out into the final account to enable me to get my profit for the year. Okay, so I briefly did touch on this, but why do we do this? So why is there this process of taking nominal accounts, closing them against the final accounts, and then determining profit? Okay, so a couple of reasons to make you understand why we are busy with what we are busy with. Okay, so we have income and expenses that are accounts that we use every financial year, so for the year 2020 or for the year 2021, because income and expenses are accounts that give us profit. Profit and income and expenses are very much calculated for a specific year. So that's why we typically say they don't have a lifespan longer than a year or the year that they are for. I mean, your sales for the year of 2020, you can't just carry that on into the next couple of years. You have to only work with the sales figure for 2020. So we would then obviously have to close them because next year we'll have a new sales account. We'll have new advertising for the year, new salaries for the year, etc., etc. So that's why we close all our income and expenses, and next year we'll just start new income and expense accounts. Okay, assets and liabilities, side note, remain untouched. They carry on for 5, 6, 7, 8 years. It's just income and expenses that have this year-long lifespan, that at the end of a year we have to kind of merge them, work out profit. Next year we'll start all over again. Okay. The other thing we can't do is we can't just do a profit calculation on a calculator because we are not busy with maths. That's the thing I always go with. We are busy with accounting. And accounting always asks us to do record keeping, double entry systems. So we use our double entries and debits and credits to calculate profit. Okay. So debits and credits allows us to slowly but surely, through a couple of steps, calculate profit, and then we also show how this profit actually goes to equity. Remember, in the accounting equation, we analyzed transactions underneath the E, the equity, that were income and expenses, because the rule was always that income and expenses give you profit, profit goes to the owner. So here you actually see it come full circle. Here we do a profit calculation using debits and credits, and we also move that profit to the owner, okay, who's obviously always represented by capital.